Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, we focus on the topic, bear markets don't last, disciplined investors do. Whenever the stock market declines, many investors begin to question their investment decisions. Watching your portfolio value fall is never pleasant, and the temptation to stop investing, or worse, to sell everything, is often very strong. Ironically, this is when disciplined investors usually make some of their best investment decisions. As the saying goes, bull markets make people feel rich, bear markets often make people rich. While market declines can be uncomfortable, they also can create opportunities to accumulate quality investments at more attractive prices. One of the biggest misconceptions about investing is that wealth is built only when markets are rising. In reality, many successful long-term investors accumulated a significant portion of their wealth by consistently investing during periods of uncertainty. Market moves in cycles. There will always be periods of optimism when prices rise sharply and periods of pessimism when prices decline. Both phases are normal. For example, over the past few weeks, the Nigerian stock market has erased 13.7 trillion naira from its recent peak, while the NGX All-Share Index has declined by 8.2%. This may sound alarming, but it reinforces a key lesson. Market corrections are part of investing, not a sign that long-term investing has stopped working. What separates successful investors from the rest is not their ability to predict every market movement, but their ability to remain disciplined through those cycles. Think about it this way. When your favorite supermarket announces a 20% discount, most people are excited because they can buy more for less. Yet, when quality companies become cheaper in the stock market, many investors become fearful and stop buying. The same discount that attracts shoppers often scares investors. This is why consistency matters. Rather than trying to predict the exact bottom of the market, long-term investors often invest gradually over time. This approach reduces the pressure of trying to time the market and allows investors to accumulate investments across different market conditions. Some purchases will be made at higher prices, while others will be made during market declines. Over time, this helps smooth the average cost of investing. That said, a falling market does not mean every investment is automatically attractive. Investors should remain focused on quality companies with strong fundamentals, sound management, sustainable earnings, and good long-term growth prospects. A cheaper price does not make a poor business a good investment. It is also important to remain diversified. Concentrating your entire portfolio in a single stock or industry increases investment risk. Diversification remains one of the simplest and most effective ways to manage uncertainty. Perhaps the most important lesson is this: investing is a marathon, not a sprint. Daily market movements often dominate the headlines, but long-term wealth is usually built by investors who remain committed to their financial plan over many years, not by those who react to every market swing. History has repeatedly shown that markets recover from periods of decline. While no one can accurately predict when the next recovery will begin, patient investors who continue to invest systematically have often been rewarded over the long term. So instead of only asking, why is the market falling? Perhaps the best question is, am I using this period to strengthen my long-term financial future? Remember, bear markets do not last forever, but the investment decisions we make during them can have a lasting impact on our financial future. Finally, stock investing is not for everyone. Every investment decision should align with your financial goals, investment objectives, risk appetite, investment horizon, and stage of life. If you are unsure about what is suitable for you, seek guidance from a qualified investment advisor before making investment decisions. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.